So-called digital asset treasury firms have announced plans to raise a combined $79 billion so far in 2025 just for Bitcoin purchases, according to advisory firm Architect Partners. But that trend is expanding into smaller tokens as well. And I'm pleased to say that joining us now is STRD Executive Chairman Michael Saylor. So, Michael, it feels like, of course, MicroStrategy, Strategy as it's now known, really started this crypto treasury company trend that we're seeing now. I know that you broadly are supportive of seeing that, seeing competitors come out and also raise their own crypto treasuries. But how do you feel about the trend that now it's moving more into altcoins? It's moving away from Bitcoin. Do you think that that's a sustainable setup?
You know, I still think the vast majority of the capital flowing into the space is flowing into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies just in the past 6 months. So I'm laser-like focused on Bitcoin. I think Bitcoin is digital capital. I think it's going to outperform the S&P index over the indefinite future. And I think it's the clear global monetary commodity in the world right now. So it's the lowest risk, highest return, most straightforward strategy if you want to outperform the S&P and if you want to inject vitality and performance into your balance sheet.
So it sounds like you're not concerned that perhaps the fact that we're seeing these other digital asset treasury companies come to the fore here, expand into altcoins, you're not concerned that that's going to detract attention away from what Strategy is doing?
I think there's an explosion of innovation across the entire crypto economy, and on the margin, it's really good for everybody in the digital asset space right now. I think the big idea is $100 trillion plus of capital in the traditional equity capital markets and traditional credit markets. And what we're focused on is delivering digital asset-backed equity and digital asset-backed credit. And I think those credit instruments and equity instruments are just going to outperform the traditional fiat credit and traditional fiat equity instruments all around, and capital is going to flow into the digital economy due to that.
Michael, explain the assets, the unique assets to which you offer investors access, because it's not just Bitcoin Treasury Company. You have, you think, a unique selling point compared to others trying that strategy.
Yeah, the real compelling idea of a Bitcoin Treasury Company is we hold a huge stack of Bitcoin, about $74 billion worth of Bitcoin. Bitcoin's a 21-year duration asset. You got to hold it for 21 years if you want the full potential, and it's about 50 vol and 50 ARR. Most people don't want that amount of volatility, even though it's got that performance, and who wants to wait 21 years? So what we've done is we've created structured Bitcoin in the form of STRK. We give you the Bitcoin upside, a guaranteed dividend, and principal protection, and that's an alternative for people that don't want the roller coaster. We've created a long duration senior credit instrument called STRF. Think of it as a 21-year Bitcoin-backed bond. Pays about 8.5% dividend yield right now for people that just want that quarterly dividend yield and a seniority in the capital structure. And then you've got a high-yield long-duration instrument called STRF. It's actually paying like 11.5% dividend yield right now, and so that's for people that want high yield forever, and they'd rather have 11% quarterly than take that's guaranteed than the roller coaster of Bitcoin. And then the most exciting thing we've done just a few weeks ago, it's the biggest IPO of the year. It's called Stretch, STRC. And STRC is like a monthly Bitcoin-backed bill. And so think of it as a Bitcoin alternative to treasury bills or money market funds. It's 9% dividend yield, monthly cash pay. And if you just want to park short-term cash and get paid 9% dividends and have it powered by Bitcoin, you're not taking duration risk on the interest rate. You're not taking the Bitcoin volatility. And that's our most successful offering to date.
Well, Michael, I do want to talk a little bit more about your financing. You touched on it a little bit. One of the other trends that you've started is issuing convertible notes to fund your Bitcoin purchases. You've also been issuing preferred stock as well. When it comes to just straight MicroStrategy shares, we know that's very popular with retail. We know convertible notes have been popular with more of the Wall Street crowd. Do you have any insight on who the end buyer of your preferred stock is?
Well, right now we've had really extraordinary demand from retail. In our last offering, I mean, we started with about 30 or 40 million of retail demand on the first preferred, and then it increased to 60 million on the second preferred, and then 120 million on the third preferred, and about 600 million on the fourth preferred. So retail's off the charts. We've also got a lot of institutional long investors, people that are holding it. Look, if you like Bitcoin or if you like MSTR, these are all pretty compelling for any pool of capital you've got. And then, of course, a bunch of hedge funds also got very excited about this. There's lots of different ways to trade these against each other. So a good mixture of institutional as well as retail investors buying into all these preferreds.
And Michael, I'd also love to get your thoughts on some of the other big news from today. A lot has certainly happened on this Friday, but one of those is what's going on in the gold market right now. You have the Trump administration ruling that gold bars will be subject to tariffs as well, these reciprocal tariffs. So imports of gold will be tariffed, and that's really sending shockwaves through the gold ecosystem. Gold and Bitcoin are also often compared to one another. Bitcoin called digital gold, for example. I wonder if you think this has any ripple effects, positive or negative, for Bitcoin.
It does. Bitcoin is digital gold. It's going to accelerate the migration of capital from physical gold to digital gold. You know, Bitcoin lives in cyberspace. No tariffs in cyberspace. The big appeal of Bitcoin is it's not physical. It doesn't have weight. You can settle anywhere with anybody in a few minutes. And so gold has always been too heavy, too slow, you know, and you can't really ship it across an ocean. And if you do, now you're getting tariffs. So I really think it just reminds everybody why the digital version of gold is better than actual physical gold. And I think it's going to catalyze a new wave of institutional adoption of Bitcoin.
All right. Crypto is stateless. It's hard to tariff. Michael, have to leave it there. Really enjoyed speaking with you, though. That is Strategy Executive Chairman Michael Saylor.